Hey everybody, good morning, good afternoon, wherever you are in the world. It's about 1:30 in the afternoon here on May 3rd, 2023. I'm here just to do a little bit of a pre-FOMC analysis, all technical based, not fundamental based, not interest rate based, just looking at the chart. Before I get into all of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and as always, I'm just giving my opinion on the market. So let's go ahead and move on into the chart. We've got about 35 minutes until the FOMC announcements and all of that. That's going to come out. So just taking a look here at intraday, looking at the market from this morning, going into, what happened yesterday. We had a nice, drop off yesterday, somewhat expected, and we were able to capitalize off of that pretty well. We had, looking at yesterday, we had some SPX puts that we kind of rolled a couple times. We were able to pull some really great moves off of that. It was a pretty good trending day, I would say here. But now, of course, we're in this mode here where we're just kind of like moving sideways now. One could say that we've got a little bit of a channel going on here, taking a look at this bottom here, kind of tacking it onto the bottom that occurred right here. And then, of course, we've got the potential for this, this top right here. So is it possible that we do see, continued move up here? It's about the 4150 level. That's very possible. That takes us to about 2:30 in the afternoon today. So, for the S&P to take, a move where we do see a little bit of a quick move up afterwards, getting up to here, that level would be an area where I'm interested in there being a rejection, mostly because if you take a look over here to the left, this is where we kind of dropped off yesterday morning. So going back up here, trying to get a gap fill, possible that we do get a gap fill up here at about the 4160, 4170 area, before we could see another move lower. What would happen if that were to be the case is we would have really the completion of a correction, right? So from down here, we have a move up, an A, and then a B, and then we get this wave C. That would make, a lot of sense. Geometrically, would that make sense? Well, let's just go ahead and take a look and see from a price measurement perspective. Let's see if this flows. Going down here, we've got the 100s a little bit higher, right? So, I mean, geometrically, that does make a little bit of sense. It's between the 618 and the 100. So let's go ahead and clean this up a little bit. Because what I also want to look at is, we've got a 618 here at 4149. We've got the 786 up here at about 4166, which that would be technically a good area for rejection. It's pretty close to a gap fill, and I think a lot of analysts would consider that a gap fill because it really taps where there would be a wick. It doesn't go to where the body closed, but the wick is there. It kind of makes sense. All right. Now I'm looking at the 1 minute chart here. So let's just go ahead and pop up a little bit. Let me go to a 30 minute. And what I want to look at is the potential for, what happens from here. So if we don't violate the top up here, which is, roughly at about 4137, almost 4137 exactly. The one thing that I found interesting about this is, SPX does like to correct down to the 175. And historically speaking, what I have said is when you see a third move, a third wave that goes to the 1618 to the 175, usually that's an indication you've got a wave 3, which means that there is lower prices yet to come. But what we've seen, at least over the last maybe 6 to 8 months in the S&P 500, we've seen moves come down here to the 175 very frequently, and we've seen that to be a correction target versus a wave 3 target. If we do see ourselves move up a little bit higher, potentially back up here to this area where I was just kind of outlining here at that 4156 area, well, then we've got this potential move down here still to about 4,000. It's very possible that we do see that move down to 4,000. Now, what I will say is if we do see the S&P 500 move down here into this zone, I would be interested in kind of scaling out of any short position that you may be in. If you're short from this rising wedge that I outlined, a while back. This was a couple days ago, Monday, I believe, is when I initially kind of pointed this out, that we'd fallen out of it. If you're short from up here and we get all the way down here, you'd be kind of foolish not to cover some of those positions. So I'm going to make a suggestion that you may consider doing that. Again, that's just my opinion. And again, if this happens to be the top, which based on the price structure here, it doesn't look like it. It does look like we want to continue to move up into the 2 o'clock hour. Again, if that were to happen, let's just wait and see what happens, right? But what would be like an upside target? So if we do see this as a correction target down here at about 4,000, I would be looking for a move to continue to move up higher into this 4,300 area. And again, it probably will take some time. Probably will take, probably the majority of the month to get there. But I would say that it's very likely that we get up to 4,300. So if we do see a scenario like this occur, where we see this kind of moving up here into this area, then we eventually do see a move down here into 4,000. I would say that more than likely we are going to see a move up here, and again, it probably will be later in May, right? Let's watch OPEX in May, seeing ourselves make a nice strong move up into OPEX, and then to see, I don't want to say that we're going to continue just kind of going down from there, but let's wait and see what happens, because at the end of the day, it does look like we want to continue correcting a little bit. But I don't want to get just caught up in that bias. But it does look like we've got a lot of fibs that are agreeing that there's going to be a significant amount of support here. And if we do find ourselves down there, even if you don't want to go long, it's going to be very wise to cover your shorts. So let me go out to a 4-hour time frame. I want to talk about something that I've got here on this chart. One thing that I'm not going to do, I'm not going to talk about what the indicator is that I'm using to identify these, but what I will say is, on a daily basis, I do have an indicator that I am waiting for an alert. And every time you see one of these red arrows, the alert fired off. Okay, and what we saw here is we had the alert fire off, basically, day after day after day. And in some cases, there was a day where it didn't occur, but it occurred the next day, right? So, anywhere between 1 and 3 indications that there is something bigger about to happen. We've seen a nice significant move down in the market. It doesn't mean that we can't spike up before we fall, but this is basically our warning that, like, hey, we're gonna see a little bit of a pullback, right? So you can see the first time this happened, at least from when I started tracking this, was in October, right? We saw a 5.3% drop. And then, of course, back here, this was in November, we saw a 6.7% drop. And then here, this was in January, we saw a 3.17% drop. Nothing too substantial. But then we had just a single alert. So you'll notice we had 3 alerts, 3 alerts, 3 alerts. Then we only had one alert, and that basically started the fall. And then here recently, we had this alert kick off. This would have been on Friday, and then we had it kick off again on Monday. And after we had those 2 alerts kick off, we started the next day with a 1.3% drop. Now, that's not a lot. 1.3% isn't a lot. The smallest amount that we've seen fall is 3.17%. So this is also another reason why I'm of the opinion that it's possible that we do see a move down here to 4,000. It's very possible, and I would say it's almost likely. Even if after FOMC we see a spike up here, we see that move up to maybe 4,250 beforehand, before we see this move down, I still think it's very likely that we do see a move down to 4,000, which again, if that is the case, we do see a move down to 4,000, well, there's our 5% drop, right? So again, anywhere between 3% and 9%, 5%, 4.5%, somewhere in that area seems like a good place for that to eventually fall. So Lifeversity wants me to take a look at IWM. I'll take a look at IWM here at the end. But whether you're looking at this on log or linear, right? So this trend line was built based off of linear, and you can see I've got my little eyes on here where we see we've got a touch here, we've got several touches here. We're currently below that, right? We're below this trend line. So As long as we're continuing to stay below this, I'm going to be a little bearish, right? I think I have a right to be somewhat bearish on this. Taking this, and let's just go ahead and kind of overlap a channel on this, and let's just see what we've got. So we've got this right here. Let's go ahead and tap it to that right there, the top there, and let's go ahead and expand ourselves out just a little bit. Okay, so this would be the channel that I would be interested in watching, and I know that things are going to start getting just a little dicey here, but watching and seeing, we've got some touches at the upper part of here, touches at the lower here, and same thing right here where we had a high, a significant high, right? So now we have this area here where we're finding a high, and let's say again we move up here. Maybe it takes some time. We get again into mid-May, right? Going into that OPEX. Maybe we do hit that 618 up there. Well, I would then be watching to see what happens if we get up above this trend line, right? So even today, right, if we get up above this trend line, I would say chances are pretty good we're going to be going up to that next level. Now, are we going to be going up to like 45, 4600? It sounds crazy for me to even suggest that that might be possible, but if we get up above that trend line, well, it really does open the door for a move to 45 or 4600, okay? If we stay below this trend line, then I do believe that it's very likely we come back down here to test the lower, again, maybe around 4,000. If we break this trend line, then it opens the door to even lower prices. Is May going to be that month where things just get battered? It's possible. But again, here on May 17th, we're having a significant cross with this trend line and the channel. If we do see a significant move down, 37.35, that's going to be a significant area where I would see some enormous support. And, fact of the matter is that would be another retest of the major bear channel from all of 2022, right? So, of course, we've broken up above, so I do have to be a little bit bullish. But as long as we're below this, we're still in a chop zone. And I outlined this back when we were about right here. I said that chances were pretty good SPX was just going to be kind of chopping, and we really kind of have been, right? SPX has been sort of in this zone, right? So if I go ahead and clear out this channel, get the channel off of here, let's go ahead and get this fib. I kind of want to keep the fib on there for right now. I'm going to keep that there, but let's remove some of these other things that are just kind of cluttering our view, okay? We have been kind of moving in this area for how long? Okay, so we've had this high right here, right? And we've had this low right here. And this has been sort of the zone that we've been in going really all the way back to November. And we really could kind of extend it further back here, but I would say that we did have some pretty trending moves. But we've been sort of chopping here for too long. And so we're going to get to an area where we're going to start to see a squeeze. We're going to start to see, at least on these higher time frames, we get to like a daily, things are going to start squeezing and things are going to start moving violently when they eventually do start moving. We do have Apple earnings that are coming up here tomorrow. A lot of other earnings have already taken place. And all these earnings that have taken place, you would think that they would have a serious effect on the market, and it really hasn't. So let's go ahead and move on into Russell. So taking a look at IWM, what have small caps been doing? Again, we've been talking about this. We've had earnings, and you think that that would have a significant effect on the markets, but we really haven't. Very positive earnings we've had here recently, but we've had a negative move on the markets since April 25th. And again, we're talking about the Russell 2000 at the moment, but really we're not looking fantastic. But what I will say here, looking at the Wave Master on the daily, we have a cross here on the daily that looks like it wants to cross up today. I wouldn't say that this is a great signal to be buying IWM right now. If I go down to lower time frames, like maybe a 4 hour, we do have a sign that there is a decent buying opportunity for somewhat midterm. But from here, we've got some pretty rickety support here at the 170 level. I would feel much better buying once we get through 177 to 179. And again, this is how I play options. Going down to lower time frames, if we start to see moves up through here, again, we're about ready to do a gap fill from Monday into Tuesday, right? IWM is trying to do a gap fill. So this looks a lot better than some of the other markets do, right? Because we just looked at SPX. It doesn't look nearly as good as IWM does. Haven't taken a look at NASDAQ, but, IWM is almost at a gap fill phase where SPX is not really close yet. But again, I was talking about options. If we can get through this level at 175, you could probably scalp some calls going into this gap fill at 175.50. Once we get through 175.50, then we'd be taking a look here at 176.40, and then finally this up here at 177.36. Now, are we going to get up there? That's that's another question that probably we'll have for another day. But looking at this, if we do have a 1-2, let's see where our target would be for a move to the upside. And again, this doesn't look very impulsive, right? This doesn't look like something that is, it's really conducive to a significant impulsive move to the upside. But a move up to like 182, that certainly makes sense. We're going to go much higher than that. That's, you're going to have to just kind of take that day by day. IWM isn't really what I pay too much attention to, so I don't have a huge opinion on it. But what I will say is, based on the structure that we've got coming from the top to the bottom, it does look like we've got a little 1, 2, 1, 2, 3, 4, 5 into the 3, going into the 4, and we should be working on maybe another move down here to about 163. So I would say to be cautious as we move into FOMC especially, but we're here at 1:40 p.m. and the big move is going to start happening here in the next, I would say, 20 to 50 minutes, right? Anywhere between 2 p.m. and 2:30. I'm looking at this pre-FOMC. My suggestion is to wait until 2:30 before you actually start to take a position in anything, if you're going to be looking at a position for the month of May, right? Or maybe going into June and July. Wait until what happens after this before you make a decision, because if you're going to try and take a position before 2 p.m., well, one, I'm assuming if you're watching this video, you're probably playing options, and implied volatility on options is going to be very, very high going into FOMC. So whatever happens after FOMC, if there is a lack of a move, you're probably going to run into some IV crush, right? So your options are going to decay. So that's why I'm saying it's probably best to wait until after 2 p.m., maybe even closer to 2:30 before you take a position, because then a lot of things are going to settle. Some of the dust will have settled. Let's just take a look really quickly. I'm going to go back to the daily here and going out and taking a look at VIX. What does VIX look like right now? VIX is currently red. All right, so VIX is red, but barely. It's down 0.03. So it's down basically 0.03 of a point. Looking here at VIX and comparing that to SPX. Again, SPX is up, right? SPX is up, by about 0.35%, where VIX is down, as we would expect, about 0.34%. So it's about equal. But if we start to see VIX increase and get above where it started, right? So if we start to see VIX turning green and SPX is also green on the day, that is sort of a warning that we could be seeing a significant move to the downside that is imminent, right? So when you see VIX and the S&P index, the cash index, I'm not talking about futures, when you start to see both of those green on the day, that's sort of like a warning sign. And especially if you're getting closer to 4 p.m., and SPX is green and VIX is green, that's an indication that probably in the next 1 to 4 trading days, there's going to be a serious increase in volatility. So you should probably be very careful in that particular case. So I wanted to be quick here. We've been going for about 20 minutes. I'm going to go ahead and end things off here. That was just my thoughts and my my idea here on SPX going into FOMC. Again, being very careful not to over leverage yourself going into it, but rather wait for the move to start to happen afterwards. There's a lot of gamblers out there, but gambling isn't the way to survive in the market long term. So just protect yourself and wait for the move to occur before you decide that you want to take a position. All right, guys. If this video helped you in any way, shape, or form, you know the deal. Like, subscribe, share. If you'd like to access to our Discord, you can find that information on BitDoctor.org. If you need access to the Wave Master or the Momentum Indicator or the Volume Analysis Tool, if you need access to any of our indicators, you can find that information also on BitDoctor.org. And of course, last but not least, wherever you are in the world, I hope you're having a good day, good night, good evening, and take care.